to make that work.
What's sort of the larger game plan for the financial services business from here on? Are there sort of newer lines of business which you think could be more rapidly growing, or are you largely focused on the existing ones?
See, our lines era today largely cater to a broad mix of customer needs. That's the way we built our products and services, customer focused and therefore outside in. And therefore, we think we've got a pretty broad base as of now.
Insurance, mutual funds, lending.
We got lending, we got broking, we got wealth management, we got general insurance broking. So we really have a range of products to meet needs of customers. So as long as those needs are kind of reasonably constant and growing as we expect, I think we should see growth across the platform.
Sort of consolidated under one umbrella, maybe going for an IPO. Is that even on the radar right now?
Yeah, I mean, it'll be something we keep looking at. There's nothing imminent there.
Will sort of the banking license be the agent for change if and when it happens?
Well, again, we're waiting for the banking guidelines. I think as they come, we'll kind of evolve our plan going forward.
I just want to get a broader sense in terms of a top-down view. We're all talking about growth kind of slowing down, some of the structural bottlenecks in the economy. How do you think all that will play out? Because financial services, banking, financial services broadly is almost seen as the industry most affected by growth or no growth kind of worries. How do you see that panning out?
So let me give you two views, Prashant. One, I think a slightly broader view, and then I'll talk about specifically about financial services. I think on a broader view, I think India Inc. is actually doing reasonably well. I think if you look at Q4 growth for the top 100 companies in terms of earnings, it was about 28% in Q4, which is in fact the fastest growth in the last 9 quarters. If you look at profitability growth, I think profitability grew at about 14%. And I think this impact is differentially impacted by both interest rate hikes as well as inflation. The other thing that's interesting is India Inc. is actually much more globalized than maybe some of us understand, because 45% of the earnings are actually determined much more by global factors than domestic. And you add to that the FII flows that I talked about. So India is actually much more open, especially from a market perspective, than we understand. So some of these things are really a function of all the stuff that's happening outside. Financial services is quite different, because that's much more driven by domestic factors in my
That's
view.
what I wanted to get at.
Yeah, and there I think it's really a function of GDP growth, it's a function of money supply, it's a function of savings, it's a function of demographics, all of which are very favorable from an India perspective. So I think you might see small bumps along the road, but the broader term picture is really attractive because of the number of factors that I just talked about.
On the flip side, sir, I mean, don't you feel that there were years that you actually thought you could make it to that 9-10% kind of mark, but if you see the sort of evolution of the macro factors, it doesn't look like we're on that path anymore. There are supply side bottlenecks which we're not addressing. There seems to be a policy inertia which we don't seem to be addressing. So we're stuck in that 7.5, 8.5 kind of band. So that incremental huge upside that financial services used to talk about, will that ever materialize, or at least in the near time?
No, I think there's a bit of a different perspective to that. I think, we have slowed down, and I think we should expect a little bit more slowdown before we stabilize and build long-term sustainable growth. But even at a 7.5-8% GDP growth, I mean, we are significantly ahead of the rest of the world, for one. For another, with the way our population is growing, if you look at per capita income growth, it is significant. So the number of people and the kind of people we're taking out of poverty and the addition to standard of living is actually something that's unprecedented from an Indian perspective. All of that ultimately plays back to a consumption theme and a financial services theme, in my view.
So the consumption theme, you think there's no danger to it, despite the fact that in the short term we are in a sort of rising rate environment, those are just blips?
Yeah, I think so. I think the long-term structural nature of the economy, I think, is both consumption and things like savings and savings products will continue to do very well.
What about competition? Since it's such a well-discovered sort of story, everybody who's anybody is in the game now. How do you think it'll play out?
That's true, Prashant, but sometimes I look at our competition levels compared to other markets. I mean, you look at a market like Hong Kong, there are probably 70 fund managers. In China, there are over 70 fund managers. So there are markets with many more players. I think it's a function of the size of the market and the opportunities available. And there I have no doubt that this market is big enough to be able to accommodate the number of players who are here.
In all the aspects of business that you operate in?
Absolutely.
You don't think the sort of foreign investor move towards India has shifted? Or actually, let me ask you, do you think it has? I mean, we've heard both sides of the story. Prashant had spoken to Jonathan Garner of Morgan, and he said, all of this political stuff is noise, and we focus on valuations. But then there are other people who've said that no, it puts a question mark on the India story. What's your own opinion?
See, I think there are a number of things at play internationally. There's stuff happening in the Eurozone, there's stuff happening with QE2, there's worries on commodities, where that's going to go. So I think risk appetite is kind of in an inflection point. People are not sure which way it will go. All of that will obviously have some impact on India given our dependence on flows. But I think ultimately the differential growth rates will play through it. Ultimately, if you look at the fact where we are, if I go back to the 60s, if I took a decade back, we were growing 3%. The US was growing at that rate. Today we are growing 7.5% over the last decade. The US is less than 1.2, 1.3%. So the differential growth rates between developed markets and our markets, I think will ultimately drive the attraction and the flows into India. So there may be small blips along the way, but the long-term story I think is very strong.
Among the blips, what in particular are you worried about? I mean, what would you sort of put in the order of priority that we need to address right now?
I think infrastructure that Prashant referred to, obviously supply bottlenecks are there, and therefore some of this inflation is structural, as people have said, because it is due to supply bottlenecks. So I think infrastructure is obviously a big issue. I think inflation is an issue because we obviously have to get over the interest rate the hikes, because obviously that impacts and that squeezes margins as well. So I would put those two probably up the order.
Okay, I think we've got a broader sense. Thanks, Ajay.
Thanks
so
for
much for dropping by. Appreciate it.
Thanks so much.
Thanks very much indeed. Take a quick break. Come back in 2 minutes. Stay with us.